Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Ferretti S.P.A. annual report. Ferretti S.P.A. offers a diverse range of businesses and services across the yachting industry. The company designs, constructs, markets, and sells luxury composite yachts under various brand names, including Riva, Wally, Ferretti Yachts, Pershing, Itama, Easy Boat, CRN, and Custom Line. In addition to yacht sales, Ferretti S.P.A. provides a range of ancillary services, including yacht brokerage, chartering, and management. The company also offers after-sales and refitting services to ensure that its customers' yachts remain in top condition. Ferretti S.P.A. operates shipyards and manufactures luxury vessels with various features, including superyachts. The company's expertise extends beyond yacht construction, as it also manufactures and installs wooden furnishings and kinetics for nautical interiors. Furthermore, Ferretti S.P.A. engages in brand extension activities, such as opening lounges, to further enhance its customers' experience. The company also manufactures and sells coastal patrol vessels by the FSD and Wally sailing yachts, catering to a broader range of clients with different needs. With operations spanning across Europe, the Middle East, Africa, Asia-Pacific, North America, Central America, and South America, Ferretti S.P.A. has established itself as a global leader in the yachting industry. Ferretti S.P.A. market capitalization of $14 billion is significantly larger than the average industry peer of roughly $0 billion. This shows that Ferretti S.P.A. holds a significant advantage in their industry. Ferretti S.P.A. trades at a lower price-to-earnings ratio of 18 times and a higher price-to-book ratio of 1.71 times relative within the industry. Despite the industry trading at relatively low valuations, the stock matrix does not show much. Investors should evaluate if the business has potential earnings that is sustainable and if the assets are valuated rationally. The company maintains a moderate leverage profile, with liabilities making up 46% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have increased consistently as the company expands. Importantly, both assets and shareholder equity have grown at least 20% faster than liabilities, indicating that the business is expanding substantially and generating value after covering its obligations. Shareholder equity has increased on average, but the growth is not consistent year over year. This may indicate one-off events such as asset sales or capital raises, rather than durable business performance. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The company have a dividend yield of 2.2%. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. The company comfortably covers its interest expenses through operating income and maintains a strong cash position relative to current liabilities. The primary drivers of revenue growth or decline can be identified by examining the key statistics and trends presented in the extracted summary. Revenue growth drivers. The company has experienced a significant increase in revenue, with a net revenue growth of approximately 3.2% from €1,240.3 million to €1,280.6 million. This growth is attributed to various factors, including an increase in sales of made-to-measure yachts by 21.5%, super yachts by 27.7%, and carpentry products and services by 6.3%. Additionally, the company has seen a significant growth in provision of services and sales of replacement parts, merchandise, and other goods by 20.5%. The launch of new models for composite and made-to-measure yachts, as well as growing interest in super yachts, have also contributed to revenue growth. Furthermore, the company's net backlog has increased by 4.3%, indicating a strong demand for its products. Revenue decline drivers. On the other hand, the company has experienced declines in certain areas, including composite yachts by 12.6%, boat brokerage by 11.1%, and pre-owned revenue by 27.3%. The decline in Europe and APAC regions has also contributed to a decrease in revenue. Additionally, there was a significant decrease in sales of composite yachts by €62.3 million and revenue from pre-owned boats by €18.2 million. Overall, the company's revenue growth is driven by strong demand for its products, particularly made-to-measure and super yachts, while declines are attributed to regional and product-specific factors. The company's financial performance indicates a significant improvement in its ability to generate cash from its core operations. As stated on page 4 of the report, the net cash from operating activities has increased to €143,119 in 2025. This is a substantial increase compared to previous years, demonstrating the company's efficiency in managing its day-to-day operations. Furthermore, as shown on page 24, the total net cash held by the company stands at €111 million. This indicates that the company has sufficient liquidity to meet its short-term obligations and invest in future growth initiatives. The combination of positive operating cash flow and a healthy level of net cash suggests that the company is well-positioned to navigate any potential challenges and continue to drive long-term success. The company's debt level has undergone significant changes over the past period. According to the extracted summaries, bank and other borrowings increased by a substantial 223% from €10.5 million to €34.3 million. Furthermore, total bank borrowings rose significantly from €32.5 million to €53.8 million, while total debt also saw an increase from €32,468 to €53,801. In terms of interest expenses, the data suggests a moderate increase. Interest paid increased by €490, rising from €2,933 to €3,423. However, it is worth noting that there is no explicit mention of interest expenses on certain pages, which may indicate a lack of detailed information in those sections. Nonetheless, the available data indicates a slight rise in interest expenses over the period. Management's outlook on the company's strategy is one of growth and innovation. They aim to maintain their market-leading position through an innovative approach, which includes launching new models for composite and made-to-measure yachts. This move is expected to attract new customers while nurturing existing ones. The company has seen an increase in its taxable base due to higher taxable income, and they will be paying top-up tax and Pillar 2 taxes in Italy from January 1, 2024. Despite this, management is confirming their midterm guidance, which includes a net revenue of new yachts growing at 10% CAGR organic, an adjusted EBITDA margin greater than 18.5%, and capex approximately €90 million. Management is also expanding production capacity, driven by recent investments in production facilities and product development. However, they have no specific plans for significant investments or acquisitions of material capital assets. Overall, the company's strategy focuses on innovation, growth, and maintaining its market position through efficient operations and strategic investments. The company has a history of paying dividends to its shareholders. In recent years, it has consistently distributed significant amounts to its investors. For instance, in 2024, the company paid out €32,833,000 on June 26, and in 2025, it paid out €33,848,000 on June 18. These payments demonstrate a commitment to returning value to shareholders through dividend distributions. There are concerns about inventory buildup in the current supply chain. The data suggests that there is an increase in work in process, semi-finished and finished goods, with a notable €90,864 rise. Furthermore, the net backlog has increased by 4.3% from September 30, indicating potential inventory buildup. Additionally, deliveries have exceeded orders collected, suggesting that products may be accumulating in stock rather than being sold. These indicators collectively point to a potential issue of inventory buildup, which could disrupt supply chain operations if not addressed. That concludes the financial summary for Ferretti S.P.A. Feel free to comment below, and I will be happy to answer them when possible.